Hello traders and welcome to another video review. Today is Monday, February 21st, 2022. We are going to start with the Forex calendar as usual. What is going on here? It looks like some data had been published already during the ASEAN session. Mostly those data were from Japan. PMI Manufacturing disappointed, Tertiary Industry Index disappointed, PMI Composite disappointed as well, and the PMIs will be the main theme of today. As you can see, we are waiting for the PMI data in form of the PMI Manufacturing, PMI Services and Composite PMI from France, Germany and the whole Eurozone. They are going to be released between 9 and 10 o'clock. Of course, then we got some PMI data from the UK as well. So this is everything for today. This Monday is very short because there is no New York session at all. So we should concentrate only on trading during the London session. PPI data from the Germany has increased above the forecast. 2.2% was the actual reading, while the forecast was 1.6%, which beats this forecast significantly. Nevertheless, the PPI is still below the 5% last reading, so it's maybe not that bad so far at all. As you can see from the France manufacturing beats the expectation, PMI services beats the expectations, and the composite PMI beats the expectations. Similar data are expected from the Germany and from the Eurozone as well. So waiting for the PMI data. So if the PMI is the main theme for today, let's take a look at the euro, of course, and at the Japanese yen. We are going to start with euro. Euro dollar daily time frame chart is looking kind of a bullish. However, recently we just don't have that much of a bullish moves at all. So what do we have here? We have a breakout out of this channel and very nice 1 week of higher prices towards the level of 1.1485, then slight pullback, and then this pin bar here. This daily pin bar tells us that the bulls are not that strong as they think they are. Bearish pressure increased after 1.1485 was violated just ahead of 1.1501, which is the key technical resistance for bulls right now. Pullback a little bit lower towards the technical support at 1.1273, and we are bouncing back up. What's the next technical resistance? The next technical resistance is somewhere here at 1.1395. As you can see, as long as we trade below this technical resistance levels, there is no chance for another rally higher. We can move our thick red line here, because this is now the key zone, 1.1485, 1.1501. Momentum just hovering around the level of 50, bouncing up and down, 52, 50, 47. So this is definitely not a bullish momentum. If we extend our channel, please remember that we got the false breakout here for now. It's a false one because it's not being continued very dynamically. Then we can say that pretty much euro dollar is still doing the downtrend. Why? Because as you can see here, we've been trading down inside of this channel for months. So one breakout doesn't mean this downtrend has been completed. It just means that euro was so cheap that some people decided, some traders, investors decided to buy it, and of course we got the reaction for that. Nevertheless, we need to break above 1.15 level in order to continue this up move. As long as we trade below 1.15, the outlook remains bearish. So euro to dollar, euro to yen, maybe. Let's take a look. Euro to yen daily time frame chart. 61% tested, again violated for the second time, ABC pattern towards 133.13 had been completed. Now we should go lower. We should go lower. Well, 61%, 130.12 is still holding the line, so the bulls are using this to bounce. However, those two technical resistance levels, 1.3159 and right now it will be 1.3188, together with the 1.3075 are not that weak as we can think, and they are keep capping the bullish bounces. Okay, so any breakout, even today's low is 129.93, any new low, which means we are going towards the wave B low at 128.27, because the ABC pattern to the upside, free wave pattern, 100 wave A measured from the down of the wave B, the lowest point of the wave B, is 100% of the wave C. This is market geometry. 100% market geometry means this is very important technical pattern. So we should continue the down move, and the momentum is already below the level of 50. Let me just put my line here, my line over the 50. Line of the 50 might be very helpful just visually to see what is going on. I'll just put some coordinates here, and we got the line of the 50 to the point. So right now we are just below the line of the 50. If we break below the level of 40, this is where the last low of the wave B was made, then we sure have some room towards the 30 points on the RSI. That would means this low here, 127.37, might be taken out easily. So that was the euro to the Japanese yen. Let's take a look at the American dollar to Japanese yen. On the US dollar to Japanese yen daily time frame chart, the situation is very interesting. Why? Mostly because we got this skewed triangle base layered triangle pattern here in the wave C to the upside. This pattern has been recently violated. Today we got a new low at 114.84. This low was made just above the trend line that you can see here. Okay, so we got ABC to the upside, then a triangle. Triangle is a continuation pattern, so we should expect the market to however, we should expect the market to bounce from the inside of the triangle and move again higher. This is not what's happened on the US dollar to Japanese yen. We got a new local low. The technical support at 114.80 is just 2 pips away. If this level is violated, and if this orange trend line is violated, easily we can get to 114.18. This is the low of the wave B. What is momentum doing? Bears are in charge of the market. We broke below the level of 50, we tested it, and now we are heading lower. It looks like we are going to see 114.18, and then maybe even this level. This is the key short-term technical support, 113.50. so please keep an eye for a downside continuation on US dollar to Japanese yen. Last but not least, let's take a look at Bitcoin. The Bitcoin bulls are not doing well. Why? The situation here is, let me just zoom in. Firstly, the situation on the Bitcoin is very clear. We were rejected from the 61% of the Fibonacci retracement and the zone of the supply zone here. As you can see, 3 important arrows are here. We out of the channel, retraced 50%. We didn't bounce. 39,320 is not enough for bulls. So right now I'm adding my next level, 61%. That's the line in the sand. 37,816 is the level. Low was what? 37,993, which is less than $150. So the question is whether this level has been already retraced or not. I think we should wait for this level to be hit perfectly and then even violated. So if there is no bounce, if there is no definite bounce from the level of 61%, this is the key oh, there you go, the key level for bulls right now. There is no bounce. Well, the bears will just push through, and below the 37,816, next target is 36,251. That's the bearish scenario, as you can see, red arrows. And then I think that after that effort of stopping the bullish ride towards the supply zone, getting them out of the channel, getting them through all of the Fibonacci retracement, the bears won't stop here and will slide the market, push it lower towards 32,905, which is the low of the January 2022. So please keep an eye here on this level, on the 61% of the Fibonacci retracement. This is the key level, and only two outcomes from the technical point of view are possible around this level. So this is to be or not to be for Bitcoin bulls for the short period of time. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.